Sustainability refers to economic development that generates wealth and meets the needs of the current generation, while preserving the environment and society so future generations can meet their needs as well. Managers with a philosophy of sustainability put environmental and social concerns into every strategic decision so that financial goals are achieved in a way that is socially and environmentally responsible. The ethical behaviour of an organisation is known as corporate social responsibility. Sustainability orientation of the company helps business leaders make the connection between the sustainable development practices and pursuit of this distinctive character and strategic advantage of their business. Sustainable development practices are a subset of business practices engaged to achieve sound strategy and performance outcomes. Every firm has a unique business strategy. In essence, three generic strategic requirements can be pursued, namely stakeholder support, efficiency, and market edge. The criteria of corporate social performance is presented on the screen. The model indicates that the total corporate social responsibility can be divided into four primary criteria: economic, legal, ethical, and discretionary responsibilities. These four criteria fit together to form the whole of a company's social responsiveness. Sustainability refers to the economic development that generates wealth and meets the needs of the current generation, while preserving the environment and society so future generations can make their needs meet as well. Managers in organisations that embrace sustainability measure the success in terms of a triple bottom line. The triple bottom line refers to measuring an organisation's social performance, its environmental performance, and its financial performance. This is sometimes called the 3 Ps: people, planet, and profit. The people part of the triple bottom line looks at how socially responsible an organisation is in terms of fair labour practices, diversity, supplier relationships, treatment of employees, contributions of the community, and so forth. The planet aspect measures the organisation's commitment to environmental sustainability. The third piece, of course, looks at the organisation's profit, the financial bottom line. Based on the principle that what you measure is what you strive for and achieve, using a triple bottom line approach to measuring performance ensures that managers take social and environmental factors into account, rather than blindly pursuing profit, no matter what the cost to society and the natural environment. Organisations can be proactive and embrace responsible business practices. Generally, businesses fall into one of 4 categories when determining their CSR perspective. Each of these categories relate directly to the level or degree of social responsibility a business is willing to take. Most managers now realise that paying attention to the ethics and social responsibility is an important business issue, as much so as paying attention to cost, profit, and growth. One thing in today's information age, bad behaviour, is increasingly hard to hide, and outbehaving the competition can provide a real competitive advantage. Naturally, the relationship of a corporation's ethics and social responsibility to its financial performance concerns both managers and management scholars and has generated a lively debate. One concern of managers is whether good citizenship will hurt performance. After all, ethics programs and social responsibility cost money. A commitment to sustainability means that things often have to be done in a more costly way. Hundreds of studies have been undertaken to determine whether a heightened ethical and social responsiveness increases or decreases the company's financial performance. Studies have provided varying results, but they have generally found a positive relationship between ethical, social, responsible behaviour and a firm financial performance. For example, a recent study of the top 100 sustainable global companies found that they had significantly higher sales growth return on assets, profits, and cash flow from operations in at least some areas of business Another review of the financial performance of US corporations considered best corporate citizens found that they enjoy both superior reputations and superior financial performance. There are many reasons why organisations stumble when approaching corporate social responsibility. CSR is also particularly challenging for developing countries who often face different societal problems. The stance that the organisation takes should account for the people that are impacted by their business, whether directly or indirectly in a global world. It is not possible to specify one singular formula that connects sustainable development practices to business success. Further, there is no definitive set of sustainable business practices, nor is there a single persuasive argument or motivation for embarking on them. However, it is possible to recognise a high-level framework for sustainable development that is common to advanced companies. From our observations, companies that are successful do the following things. Firstly, they review, recognise and acknowledge the company's sustainability orientation as it develops as an integral part of the business strategy and culture. Number two, they canvass the specific sustainable development issues and business activities for opportunities to make beneficial changes. Number three, they analyse the potential for these sustainable development practices to contribute to one or more of the three strategic business requirements, namely stakeholder support, efficiency, and market edge. Number four, they choose, develop, and implement the unique set of sustainable development practices. Number five, they measure progress. And we will talk in more detail about measurement in the next section. By adapting, reviewing, and extending sustainable development practices within an evolving business environment, strategy, culture, and business practice, it will ensure companies can make the most of their sustainable development practices. However, the ultimate argument for sustainable development practice rests in the creation of business advantage and also innovation.